If your bank moved money out of your account tomorrow without asking you first, would you assume something illegal had just happened? Most people would. In all 50 states, under one specific condition, it's not illegal at all, in fact. It's legally required. And you won't know it's happened until you try to access your bank account. This isn't a scam. It isn't a data breach. It isn't a criminal. It's a documented state law that's been on the books in some form since 1954. Every bank in this country is required to enforce it. And the one condition that triggers it is something most Americans have already set up on at least one of their accounts, without realizing they did. Today, I'm breaking down the two legal methods that let this happen. What action or lack of action triggers each one, and the three account protocols that stop both cold. Let me be clear up front. This isn't about someone breaking into your account. This is the rule book your bank is legally required to follow. And stay to the end, because I'm going to show you the single phone call that resets the clock on every account you own. Most people assume logging into their banking app is enough. In most states, it isn't. That assumption is exactly what's costing people their savings right now. I've spent 15 years in payment security. In that time, I've reviewed compliance frameworks for banks, credit unions, and payment processors across the country. And the method I'm about to show you is not a loophole. It is not a bug in the system. It is a documented federal and state law that every financial institution in this country is required to enforce. The process is called escheatment. It has been active in some form in the United States since 1954, and it is the single most under-discussed legal method in personal finance. Here is how it works. Every state in the country has what's called a dormancy period, a window of time after which an account with no activity is classified as abandoned property. That period is 3 years in states like California and Illinois. It is 5 years in most of the others. When that period expires, your bank is not permitted to hold the funds. It is legally required under what's known as the Uniform Unclaimed Property Act to report the account to the state treasurer and transfer the balance. That is not discretionary. That is the law. Now, here is what the bank does not have to do. It does not have to call you. It does not have to send certified mail. Most states require only a single written notice, one letter to your last known address, and the bank is in full compliance. What the law does not specify is exactly what counts as a qualifying interaction. That definition belongs to your bank. It is in your account agreement, and your bank is not required to walk you through it. The accounts most at risk are not the accounts people are careless with. They are accounts held jointly with a spouse who has passed. Certificates of deposit that matured and rolled over automatically. Savings accounts opened at a credit union in a different city decades ago before online banking existed. These are accounts held by people who saved carefully. The mechanism doesn't distinguish. The day I reviewed the dormancy compliance documentation for a regional credit union, I counted 11 separate account types that qualify, including minor savings accounts where the original holder's child is now an adult. The clock had been running for years. Nobody in that household knew. That last part is what makes this different from every other financial threat I cover. There is no mistake to avoid. There is only a clock you didn't know was running. Before I get to the second mechanism, which involves a specific dollar amount that triggers an automatic federal report, hit subscribe. I break down documented mechanics like this every week, and YouTube will put it directly on your homepage. And real quick, I want to tell you about the sponsor of today's video, because this one actually fits. With how expensive everything's getting lately, gas, groceries, literally just stepping outside costs money, I've been trying to find ways to build something from home without adding more expenses. Because the biggest reason most people don't start a business isn't a lack of ideas. It's the cost of starting. Inventory, storage, shipping, you're expected to spend money before you even know if it'll work. So I tested something that removes all of that. I opened ChatGPT, made a simple design, uploaded it to Printify, and placed it on a few products like hoodies, mugs, and phone cases. It instantly generated mock-ups that actually look like a real store. From there, you just publish it. If someone orders, Printify handles the printing, packing, and shipping, so I can literally build something from my laptop at home without dealing with inventory, logistics, or upfront costs. No overthinking. No risk of being stuck with products that don't sell. It's not even about starting a big business. It's just a simple way to test an idea and see if it actually works. Honestly, with how things are right now, I'd rather try something low risk then keep waiting for the right time. If you've been thinking about starting something, this is probably one of the easiest ways to just start. Link is in the description. It's free to start. Go check it out. All right, back to the second mechanism, because this one is different in one critical way, and the trigger is a specific dollar amount most people have already crossed without realizing it. The second mechanism is different in one critical way. Escheatment is triggered by inactivity. This one is triggered by a single transaction. Federal law requires every bank, credit union, and financial institution in this country to file a currency transaction report, a CTR, with the Financial Crimes Enforcement Network for any cash transaction above $10,000. One deposit, one withdrawal, one exchange. The report is automatic. Your bank does not notify you that it was filed. It will not appear on your statement. Here is what's in that report: your full legal name, your address, your account number, the amount of the transaction, and a description of the nature of that transaction written by the bank employee who processed it. That report goes to FinCEN and is accessible to federal law enforcement without a warrant. That is documented federal statute, 31 U.S.C. 5313. Now here's where it becomes a problem for careful people. The threshold is $10,000, not 10,001. 10,000 exactly triggers a report. So does 9,800. And so does a pattern, 8 cash deposits of $1,300 each. If a bank employee determines the pattern looks like what's known as structuring. Structuring is deliberately splitting transactions to stay below the $10,000 reporting threshold. It is a federal crime under 31 U.S.C. 5324. Even if the money is completely legitimate, even if you didn't know the law existed, proof of criminal intent is not required. The pattern is enough for a referral. The people most exposed to this are not people moving illegal money. They are people selling a vehicle privately, people withdrawing retirement savings to pay a contractor in cash, people receiving a life insurance settlement. Look at what both of these mechanisms target. The dormant account law takes money from people who saved carefully and stopped checking. The CTR flags transactions from people handling legitimate money in cash. Neither one requires a mistake. Here's what I told you to stay for. 3 specific actions. Each one maps directly to one of these 2 methods. Action 1, annual account interaction log, escheatment. The dormancy clock resets on a qualifying interaction, but qualifying interaction is defined by your bank, not by you, and not by federal law. Logging into your account through a third-party budgeting app does not reset it. Checking your balance through a linked app does not reset it in most states. Here's what does. Log directly into your bank's own website or app once a year for every account you hold. Then call customer service and request a balance confirmation. Ask that the call be logged. Write down the date. That is a documented interaction on the bank's record. That is what resets the dormancy clock. Do this for every account, especially the ones you haven't needed to use. Action 2, beneficiary audit, joint account escheatment. If you hold an account jointly with a spouse who has passed, the dormancy status on that account may have reset to 0 on the date of death, depending on your state. Your bank did not automatically flag this. That responsibility falls to the account holder under the terms of your agreement. Call your bank, request a beneficiary review, update the named beneficiary on the account. That interaction creates a documented record that the account is actively managed. It also protects the account from entering a contested dormancy status tied to the estate, not at your convenience, not eventually, within 90 days of a change in joint account holder status. That is the window most banks use as the starting point for dormancy reclassification. Action 3, cash transaction documentation, CTR. If you are withdrawing or depositing more than $8,000 in cash for any legitimate reason, document the reason before you walk into the bank. A written statement of purpose, a copy of the invoice, the contract, the sale agreement, or the settlement paperwork. Hand it to the teller and ask that it be attached to the transaction record. This does not prevent the CTR from being filed. The bank is required to file it regardless, but it provides the teller with documented context for how they describe your transaction in that report. That description is what a federal examiner reads first. Context matters, not for illegal transactions. That is not what I'm describing. For legitimate large cash transactions, documenting your intent before the transaction is the only layer of protection you have over how that report is written. Most people don't find out about this until there's nothing left to protect. You found out today. The 3 actions I walked you through are straightforward. They don't require a financial advisor. They require about 30 minutes. And now you know exactly where to start. Subscribe. I break down mechanical vulnerabilities like this every single week, the ones designed to bypass common sense, not to trigger it.